Ladies and gentlemen, good afternoon and welcome to today's session. Today being our second session for probe review and then of course also our last session. So let's jump straight in and get going. Right. As always, all attendees have been muted. That's really just so that we avoid those uncomfortable moments where someone joins and then we hear the sound in the background. We have activated the Q&A as well as the chat function as well. So you can also use the chat function. I will keep an eye on that. And then it looks like Samu has also joined us. Thank you, Samu, for just monitoring any questions and ensuring that if there are any questions or technical matters, that is also addressed. If you do lose signal or if you are disconnected, you can obviously just join again. So the webinar will be here. And as always, we are recording the session and we will make the recording available on the Success community. So let's just see where we are in terms of the track or in terms of what we've included in this review schedule or in this review round. We started off in February on the theory, the technical part about performing independent reviews. We then had a quiz online that we encouraged you to complete. Maybe you completed it, maybe you haven't yet. We did also load the recording on there, so that's always available then to refer back to. And then today we are doing the second session to go through the software and apply all of that theory into a case study now. So you will also see that on the Get Ahead page, and that's also with the QR code in the initial link went to. On the Success community, we have already loaded the recording from the first session, and you also have the material for today. So if I just quickly go to the Success community, this is the link or the page where you would land when you go through to the link. If I go to that track schedule and you go right to the bottom of this table, that's where we have the review session. There we go. So there's the first session, the slides from that first session, as well as the recording. And then on the learning portal, you would have had the quiz if you completed that. And there are the resource files for today. So in there are the slides, not many slides, but a few slides for today. And then the Caseware file that I have with the trial balance and a few of the parts already completed for us, so that we can just carry on with the remainder of the case study application then. All right, so that's all there under the probe review line for us there. Oh yes, I wanted to just quickly talk about the e-learning also. If you're wondering where to find the e-learning, maybe you haven't been allocated yet or you haven't found it, then you'll see also right at the top there's a link to say e-learning courses. That will take you to a frequently asked question about the e-learning courses with specific links. And now, as I'm saying that, I'm hoping that we have the specific link for review as well, but let's just quickly see what's going to open up there. There we go. There you see the third one is then for the Get Ahead probe review. And if you then click on that, it will take you straight to that course. Now, if you don't know what your login details are, you can always just go and say lost password. Then you can basically reset your password with a link to your emails. If you have not been logged in or enrolled at all, then you can always just enroll yourself. All right, so that is relatively easy to do. On there, you might just want to have a link to actually get there, which of course is in the frequently asked questions document. Good. So that is then the Success community with all of the material for today. I said I'm going to monitor the chat, so I just want to quickly open the chats on the side so that I know I will see when a chat comes in. Good. Then next up is just in terms of participation. I've mentioned that the chat and the Q&A function has been activated, so you can see that also there on the slide. Just to the left of that little coral block, you'll have the chat. Q&A is in the block, and about 2-3 spaces from there is the react as well, if you want to add reactions during the session as well. Okay, and then what are we going to do today? So we dealt with the theory parts for performing independent reviews. We also addressed the South African Companies Act requirements in the first session. So I'm going to assume that you are already comfortable with all of that content, and refer back to those where relevant. If for some reason you did not attend that session or you haven't watched that recording, then again, it is available. So just go and have a look at that to just recap or just refresh your memory if necessary. But other than that, we're basically going to just go through the 4 stages of the review and literally just go through the documents and see how that works. Also, to some degree, I'm going to rely on the fact that you probably have performed audits on the probe audit methodology, so you're probably going to be familiar with that. Or otherwise, if you are not familiar with it, you can always go and just watch the probe audit planning sections to also tell you a little bit more. But what we never actually do in the training sessions is to go through every single question, because then we'll probably be busy for 2 days to really discuss every single question. So use the opportunity to submit a question or anything. If there is a specific or particular question or matter that you need clarification on, if I don't address it. So please do, do just point me to that direction if there is a question that I'm skipping or that I haven't addressed to your requirement. All right. Then we're going to start really straight away with a Caseware file. And what I first want to point out to you is basically an optimization in the template that is available. This was released in the November template. So when you are now creating a new file, what you will see is when you click new, or even when you do the roll forward to the next year, when you are opening up the file and you've selected the template, you've given it a name, then you're going to get this new file wizard. It's going to ask you what type of engagement you want to do. I didn't give you a screenshot of the whole list of engagements. There is an option for a compilation and a review in the same file, and there is the option just for the review. The benefits to those 2 options, as opposed to how we did it in the past, is that now you will then basically save the content, or the content for audit engagements that's not used in a review will be completely left out of the file. So your engagement file should just actually operate so much faster. So that's really the benefit. A lot of the risk assessment documents, in a review, we'll see section 11 and section 12 is not used at all in a review, which are a lot of audit documents. So all the content in there, all the scripts, all of that is left out. And so you should be finding that your independent review files are working quite at a good, comfortable pace. All right, so I think that's the first important thing, is make sure that when you're selecting your file, that you select the review. If you select the audit, it's not going to have the review documentation in. So you might be able to start with some of the stuff, but then the review specific stuff is going to be excluded. If you do select audit, you're going to have to start again and start a new file. You can't actually, almost want to say, swap them halfway through. In the audit file, if you had switched off a section or optimized a section's content out, you can always add it back. But in terms of the types of engagements, you cannot. If you've said you're going to do review, you've got to stick to a review in that file, or else start a new file if you first did an audit and then are stuck with the audit documentation and then missing some of the review documentation. All right, so that's just the first thing. I have, of course, already created a Caseware file for us. I called it Get Ahead Probe Review. Apologies, the entity is called Wrap Up Manufacturing, which you'll probably be familiar with already from the audit sections or the audit courses as well, if you had done that. All right, so that then being there. I just want to, I've already had a session this morning, so I just want to quickly just take a sip of water because my throat is sounding or feeling a little bit, moaning today. Right, apologies for that. Hopefully it will last us now through the afternoon. Right, having then created your file, I think to me, I started to think what will be put into the slides for this afternoon. And I think this slide that I'm currently showing you is probably the most critical one. I've also shared with you what documents are included in each of the sections or so, in case you want to have a complete list of all the documents relevant and so on. But I think this one is probably the most important one in terms of the probe review methodology. And it starts by saying that we need to obtain an understanding of the entity. Now, how do we get that? We do that through inquiries and through analytical procedures. Why? What is the point? We want to understand the entity so that we can ultimately get to the point of saying we need to address all material items in the financial statements, including the disclosures. And in addressing those, we're going to focus on areas in the financial statements where material misstatements are likely to arise. And then lastly, we need to then obviously get sufficient and appropriate evidence for the basis of our conclusion, which our conclusion report sentence says, if everything's worked out well, if there's no material misstatements, nothing has come to our attention to tell us that the financial statements are materially misstated. So that's really summing it all up. So if we then maybe look at the second line of the slide, first of all, we'll obtain an understanding of the entity in order to identify that LTBM, items, financial statement accounts, call it what you want, likely to be misstated. LTBM, likely to be misstated. And for those ones where we do identify that it is likely to be misstated, we are going to design specific responses. So if you identify, I don't know, maybe the client recorded extra sales, which they should have actually not, and we can see that maybe from extra returns after year end or something, and therefore maybe they just actually preempted sales or recorded extra sales or something like that. Then we will specifically go and respond by performing procedures to address that risk, that concern we might have. Okay, so the standard on review doesn't actually talk about risk, although we will probably think about risks, and you might even think about assertions, but again, the standard doesn't actually refer to assertions. So your mind might still think that way, but the standard doesn't use the terminology. When we do have, and when we have identified items that are likely to be misstated, we've recorded those, then we have to do work until we can conclude in one of two options. One, there's no material misstatement. This issue is not likely to cause material misstatement. You will probably go and address that until your concern is basically addressed. You've satisfied your concern. You are comfortable that has not caused a material misstatement. Okay? You don't have to prove it, but you have to get to the point where you can say, nothing has come to my attention. Yes, something's come to my attention, but nothing has come to my attention that causes me to believe the financial statements are likely to be materially misstated. So the thing that did come to my attention, I've investigated it, I've considered it, and it didn't cause me to believe financial statements are materially misstated. Then secondly, if I can't get to that, I'll probably then continue to investigate and get to a conclusion that the financial statements as a whole are in fact materially misstated due to this thing that we've spoken about. So you can't just, almost want to say, stop halfway through, hang in the middle. You have to either continue until you are comfortable it's not materially misstated, or if you come across a material misstatement and the client doesn't want to fix it, well, then obviously that will be a material misstatement. All right. That's the likely to be misstated. Then for the material items, there when we have material financial statement items, financial statement accounts, financial statement line items, sections. For every material section, then, if we want, we will have to perform detailed procedures to investigate further whether those items are likely to be misstated. And if they are likely to be misstated, we'll go and treat them, respond to those likely to be misstated items specifically until we can conclude, like we said just now, either not likely to be materially misstated, and therefore we can conclude nothing's come to our attention, or we have found something, but other than that, nothing's come to our attention. The same way we spoke about the conclusions last time. Right, so we'll do more work on the material accounts than we would on, let's say, most of the other accounts. But ultimately, the question is whether there are items likely to be materially misstated. Good. So if we then, I think I'm just actually going to quickly show you the slides just so that you can see what they look like in case you haven't downloaded them. There's our 4 sections. And then for each of the sections, we're going to literally just work through the documents. All right, so that's your pre-engagement, all the documents in there. You're completing the engagement working papers. We will see the work programs. And then very specifically, you will notice that there are specific sections that will always be performed: related parties, commitments and contingencies, cash flows. And then also the general work programs, the financial statement preparation, the accounting records, the laws and regulations, right? And then, of course, those work programs with material items and those that have items likely to be materially misstated. And then we'll do the finalization, which is very similar to what you're probably already expecting after we've discussed the theory: subsequent events, going concern, final analytical review is an option. You don't necessarily have to do it because you've analytical yourself all the way to this point. Evaluation of misstatements. And then when we get to reporting, to then consider the assurance report. So the type of conclusion you'll have, the senior's final checklist, engagement quality review, and then your normal reporting things. All right, so those are your slides. I actually almost want to now, I want to say stop sharing my slides and let's just look at the caseware filing. All right, as I might have done in the past when I'm working on the caseware file, I like to switch off the camera so that we can all see what's happening on the screen. I'm going to be looking at another screen in any event. And because there's so much data moving there, the fact that I'm sharing my video as well might actually affect the quality of what you are seeing on the screen side. So I'm rather going to stop sharing my camera, still sharing my screen, and we will get going. All right. The first thing I want us to see or to look at is the information store. Good. Information store. That every now and again I have to remind myself, whenever I've imported a trial balance, before I actually start the work in my file, I first want to open my information store. Sometimes there's just things like the type of company, things like that, that doesn't actually activate as much as we would want to. So I always open up the information store. And now in this case, it's also good for us to just have a quick look at it. What do we have in there? Okay, so now it's just opening up. Oh, really taking its time now. Apologies. I could have opened it before the time. I intentionally didn't open any of our, I just want to say work programs, because very often they are freezing up when I've already opened them. I'm going to open the public interest score so long as well, just because you'll remember that we also considered the PI score and we asked ourselves, can the audit be performed for a company due to its PI score, its public interest score? So we also want to see whether the public interest score doesn't perhaps disallow the performance of an independent review. Good. So here's our information store. We've got wrap-up manufacturing. We've got it as a company. Unlisted small companies act, of course, applicable. We've got shareholders, so plural. We can see we are using IFRS for SMEs. And we have, oh, I see my report is ticked. Okay, we are doing an independent review, not an audit. I don't know how both of them are ticked, but all right. And then I think that was about it. We had included here, if I think about the independent review, I had included the information. You can see it's someone else in the firm that is preparing is the preparer or the compiler, but it is still someone from the same firm that we have. And we'll ask ourselves whether that is allowed. Yes, it is allowed, because it needs to just be an independent individual, not in my same team. So in other words, it can't be someone that is also in the review that is the preparer, or if we say it the other way around, it can't be someone that is the preparer cannot be part of the independent review team. So probably separate partners there. Maybe the directors, okay, we don't need the directors so much, but there are a few directors. And then we can probably from there go and look at that public interest score. Right. Good. Here's our public interest score. We've got a private company, independently prepared financial statements. Someone else is preparing it, so that's that. Average number of employees is 15. We've got the information from the income statement or from the trial balance. 23 million in terms of total liabilities, total turnover, and then the number of individuals, the shareholders in this case, those with a direct or indirect beneficial interest holder. So total public interest score in this case is 156. It's owner managed, so technically it doesn't actually, no, we don't know. Do we know if it's owner managed? I don't think we've determined that yet. But the company is not required to be audited, so there's no requirement for an audit, and therefore independent review should be fine. This one at the bottom, this is a newish part to the template, just where they are using the final figures after journals. And that is mostly for, if I remember correctly, what drove that was the XBRL reporting, where you needed your PI score basically to link or to reconcile to your final numbers. Right, so that there then. Good. Then we're going to start, sorry, apologies. Then we are going to start the planning. And we've looked at the engagement store. We are then starting the engagement evaluation. So 1020 is where we start the independent review engagement. Let's open that. Right, so you'll see that there are a number of documents here that show optimized, optimized, optimized. And those ones, 1050G, 51, 53, those ones are the ones that are audit-only documents. So in the past, you would have opened them and they would have said, this is not a document required for independent reviews. And it would still have been there. But now, actually, if you open it, it's just literally completely blank. You can see how quickly it also opens. There's no scripts to run in there. It's just a blank document, basically a space saver. So those documents, what I always recommend is not to delete them as such, because it is possible that there shouldn't actually be anything in here. I don't believe there is something, but I still feel it's just safest not to delete them. That's almost just like best practice. So if they, almost want to say, if they irritate you, if they bother you, they're there, but they shouldn't be there. You know, create another folder here at the bottom where it's got other or something, and create a folder that says new folder, and we say unused audit documents, something like that. And then we literally move those things into that folder, and we know it's there. It's not going to bother us. Now I need to move it into that folder, of course. Huh? So then it's not bothering you. It's not in your way. You can carry on. It's not going to make you think you should have done something every time you look at it. Right. I'm absolutely amazed now. I think there must be something wrong with my, it's not that I've synchronized it. Actually going to just, I worked through this file yesterday and there was nothing wrong with it. And today it's, everything is slow. And I didn't even delete the document. Oh, it says I'm offline and it couldn't verify that I have a license. I should have shown you that now. It's just warning me that it wants me to go online sometime in the next few days. Goodness. Actually, I think what I'm going to do, ladies and gentlemen, I do think it might be because I haven't been on the cloud for a while. Just quickly going to connect to my cloud server, which is my content provider cloud server. There we go. Not the file is not even on there, but maybe it just wants to verify my license. I did have an issue yesterday also with licensing, but that was just some other funny thing. Some of you might even have been in my audit level 2 training this morning where everything was working perfectly fine in Gateway, eh? Now suddenly it wants to give me troubles. There we go. Yay! Okay, so maybe I just should have told it or reminded it that it is all fine. Okay. See, my Gateway file's now closed up. Ay, ay, ay. Checking license, you see. Okay, good. I'm going to continue with engagement evaluation. So, apologies, this is not really the wrong way around. Good. We are in engagement evaluation. We've got the document open. Let's go. Right, so what I've already done for us in the file is I already said to it, it's going to be a review. So you might have already seen the other options potentially. Of course, it's almost like I've got to tell it its name because otherwise the content cannot actually show for me. It doesn't know what questions I need to complete. So it's always important that we start off with review. Even as I was preparing and I was looking at one of the other documents and stuff, it didn't work. It literally did not want to show me anything until I came and told it it is a review document. So that's why this is always one of the first points to come and address or assess when we are busy. Okay, engagement type, we are busy with review. What will I notice when I've selected a review? I will see that this is no longer a risk column as we might have had in an audit. This is now an LTBM column. And even if I here then go and click on the risk button, I then see items that are likely to be misstated, and I have all of the sections that are activated, the sections that have balances, but it is items that are likely to be misstated, not assessment at a certain level or risk at a certain level. I also have the going concern and the subsequent and report management items, no key audit matters, no risk at financial statement level, things like that we might have expected for audits. All right. So, oh yes, and of course in the freeze we see review. I've also selected to do a large one. There is no difference between large and small. So in this question to say, do we plan to treat this as a small or large? I've just made it a large in any case. Okay. Also, I personally like the fact that it's got some considerations which tend to disappear when I make it small. Then the question whether this is the first time that we are doing the review of this entity. We are doing this as a second year or third year, whatever, of the audit. So it's not our first audit, and therefore we don't have to consider the previous year's information or the reliability thereof or anything like that. And we have a number of questions here, just almost in terms of light switches. What do they call directors? What do they call management? We have indicated that the client uses IFRS for SME as the financial reporting framework rather than just other or entity-specific basis of accounting, just to make sure that the documentation, everything works correctly there. Yeah, what I want to highlight in terms of the question about whether we need to prepare the financial statements. If we say yes, like I've done here, this is the firm, Fletcher Incorporated, prepares the financial statements as well. Then we will have a question later on to say, just here, question 10, to say, are we allowed to be appointed as the independent reviewer in terms of Regulation 29.5? The other part also to it is that when we say, yes, we are required to prepare the financials, the engagement letter will actually have a paragraph about the fact that we are preparing financial statements. So for me, risk management wise, I don't want that. So I would probably rather than say, are we required to prepare the financials, as in almost reading the we, I want to say as the royal we, but practically probably rather as reading it, do we want to say this team of independent review personnel, are we required to prepare the financials? And there you could possibly say no. You still have your comment field where you can say the review team is not preparing. There's another practitioner in the same firm that does perform the compilation. It is allowed in terms of the Companies Act, which then, of course, addresses also the question that we had earlier on here at the bottom to say, is it still allowed? And there I just said separate partner because I've already documented here at the top that it is allowed. Okay, that's where I put my more detailed comments in there. All right, then. Is it a public interest entity as defined by the IRBA code? I would be very surprised if we are doing an independent review for a public interest entity. Generally, this is not something that will be done in a South African environment. It's not impossible, I guess. And it also indicates or tells us there that in the information store, we did not indicate that this is a public interest entity. One matter or thing that's maybe just relevant there is that there's additional independence requirements when we do indicate a public interest entity. So the independence standards or independence requirements from the code, that section is called the independence standards, is applicable to audits and independence reviews equally, in the sense that it's not a separate, the audits don't have stricter requirements than independent reviews, and therefore the public interest entity requirements, the independence requirements for public interest entities are the same. So, well, if I say the same, all of those are included in 4A, not 4B. Let me just very clearly say that. So it's not like some of those requirements, if it says assurance or if it says it's applicable in 4A, that then it's not applicable to independence, to independent reviews. It's 4A is applicable to audits and independent reviews. That's just the statement I want to make. So when they say, for example, they talk about maybe, what is it now, long involvement of the engagement partner, things like that. That could also be a problem for independent review. So that's why it is important for us, if we are doing a review on public interest entity, that we realize we need to go check compliance with Section 4A of the code, not 4B. All right, so that's just the reason for that there. Then we've discussed the preconditions for an independent review. So here we are really just documenting those. Just be very careful. It asks you here, or it prompts you for the details of the purpose of the independent review and who the users are. Now, somewhere there could be this content may actually pop up. Let's say, for example, in the report to management or something like that. So just be careful how you word it and what you word there, but also because it does prompt you for the users as well, you can add sufficient detail there, but I guess the important part is just to always make sure that you document it such that it, almost want to say, can pop up in another document if that's the case. I thought it pops up in the engagement letter, but I didn't find it in the engagement letter. I really carefully looked for it in the engagement letter. So still, just make sure that you always read your documents before you give it to the client to sign or anything like that. Have we agreed the terms of the engagement letter with management? I said yes, but I didn't actually add the date of the latest one, which technically speaking you would. What I had said here, however, is that I said it's not necessary for us to update the engagement letter because we have considered this currently signed engagement letter and nothing changed there. The firm's information didn't change. Sorry, there press something on the mouse and then it changed. The firm's information didn't change. The client's management didn't change. There was no other reason for it to change. So I just then said it's not necessary to update the engagement letter. I guess I could have gone and looked at what the imaginary date was, but that's just how I now answered these ones in here. Okay, the client didn't request a change, anything like that. Then also just consider your quality management policies and procedures, if those need to be completed, if there's anything else that needs to be done there from your firm's system of quality management. And then maybe just before that, the one about the quality reviews. I'm going to show you the documentation for engagement quality reviews, or just point them out for you. Engagement quality reviews in terms of the quality management standard ISQM2 is also applicable to reviews and all other engagements. The question is whether the firm, in terms of the system of quality management, identifies those items as, or those engagements as necessary to be performing quality reviews. So it's probably not that likely, but it's not impossible. And so that's why we are prompting you to say, do you need an engagement quality review for this or that engagement? All right. So I'll point those documents out also that need to be completed by the engagement quality reviewer. And then the rest of the questions are mostly just checking whether there's any reason why we shouldn't take on the engagement, ethical requirements, etc. What I've done in our engagement file for you is just to indicate if we do identify a threat, because I think sometimes I almost want to use the word in most cases. We probably do have threats to compliance with ethical requirements, but we have dealt with them or responded to them appropriately. So here, for example, we said, are there any threats to the firm's compliance? And I said, yes, self-review. The fact that we've got another partner that performs the compilation, right? Document your discussions with the partner. And you can then, let's say, include, okay, it doesn't give you a point here, but you can obviously document it there. And then were the significance of the threats identified and evaluated. So the current code has a conceptual framework that's like a 3-step approach. Step 1 is identify the threat. We've done that. Step 2 is evaluate if that threat is at an acceptably low level. And here we then documented, so it's not at an acceptably low level, and therefore safeguards have been implemented. What are our safeguards? We have a separate compiler, and the team members are not shared with the reviewer. That was the safeguard. So we evaluated, and then question 22, based on the evaluation of the threats identified, did you either put in place safeguards to eliminate the threats, or if you couldn't, do something else to ensure the threat is reduced to an acceptably low level. So those are just the 3 steps there. I just wanted to show you how to use those steps there. Don't just conclude in your mind and say, yes, it's fine now, we've done that, but to document that you have applied the conceptual framework. The conclusion there then, and then we will allocate this to the partner. Now, I'm signed in as almost want to say a training profile, yeah? So that person in the training profile is named Larisha Govender. So I'll allocate her as the independent reviewer, the partner, if you want, the engagement partner. And only when that person is logged in. So I could allocate anyone. I can even allocate, I think there's a Peter partner, Paolo partner. I can allocate anyone. But only the person signed in as that individual can use the sign-off button. All right. So I will then sign off and say, happiness, we are accepting this engagement. And that's 1020 for you. Then we will have 1030, which is the discussion with those charged with governance. That is the document. Sorry, I'll skip the engagement letter. Let me just quickly, I want to just show you one thing in the engagement letter. If you don't use the case for engagement letter, that's not a problem. But I want to just highlight to you the paragraph that we need in there for an independent review specifically. You might remember that the standard said you need to very specifically or explicitly, probably we can say, remind users that they cannot expect an audit from this. You are doing an independent review. Right. No, I didn't go and make a mental note of where this is. So just give me a second. There we go. There we go. Just before there. As we are engaged to review the financial statements, and a review is not an audit of the financial statements, there is a higher risk that the material misstatements may exist that will not be picked up by the review. Right. So that is a very important part then that should be in the engagement letter. The rest of the engagement letter works exactly the same as reviews or compilations for that matter. Oh, sorry, audits or compilations. You have your input or your design mode that you can activate if you need to. Also in settings, you can leave your header and footer spaces there to accommodate for your firm's letterheads. Right. Good. Then with discussions with those charged with governance, we also ideally want to have discussions with more than one person, but again, you're going to see how big or small your client is and who's available in terms of, I want to say, like, who can actually ask you the information that you need. So the first thing here is when you are going to use it, it is a template document again. So we're going to really just say copy and paste or Control-C, Control-V, and then create a second document. And that will then automatically add the number on from 1030 to 1031. 1031 is then what we're going to call, in this case, I just literally right-clicked and changed the properties. It had already renumbered itself, but I changed the properties to say this was discussions with a financial manager. Okay, because I might have one with a managing director, one with a financial manager, one with a whoever. You know, I don't want to say storeman now because you might not have a discussion with the storeman for an independent review. Good. So in this discussion with those charged with governance or with a financial manager or director, someone like that, it's quite similar to what we have with an audit, only then obviously the review related questions. Goodness me. Oh, there we go. All right, so you'll describe the position of the person and then select from the drop-down menu which person's stuff you want to basically show so that you can have the right question. So member of those charged with governance, management, other staff, management, and those charged with governance, and then you also have the internal audit representative. We didn't say that our client is an accountable institution, so we don't have one for the accountable person, but you might actually have a money laundering officer if you have a bigger client that is an accountable institution. I picked to complete it electronically, not have a space for the signee, and then I didn't complete the rest of it. You'll obviously add the person's name, the date, and so forth. And then really just general questions that you need to document. You'll see they are slightly different. So there are things like changes in the activities, new contracts, things like that. So I would say not as extensive as for audit, but the point is still being that you'll document the response from the client, then your response, whether that corresponds with your understanding of the client or makes sense in line with your other inquiries that you've made, or even your analytical review procedures that you performed. And then at any point, if there is necessary to record a item likely to be materially misstated, you're going to just go and record those, as we mentioned. Okay. Fraud questions, IT, accounting, and so forth. So they are all there already. Okay. Then gathering information is one of the documents that's also applicable to the independent review, and to some degree also to know how to modify procedures that might be appearing in the likely to be misstated documents later on, or in the documents for material items later on. Feels to me like I should have rather opened up these documents beforehand, because either I'm just impatient today or they really are taking a bit longer. But I'm connected to the cloud now, so we shouldn't have any other surprises today. Good. So here we also have the main three themes about just general considerations, transactions, and accounting related questions. Now, the interesting thing to me is always when I read this first question about, oh, sorry, that's 1052. There we go, 1050. Did the entity perform a physical inventory count? Now, the question is because the client has to also like have counted their stock, But I always ask myself that what would we do if the client did or did not do an inventory count, and we are maybe concerned about the inventory, and now we don't know when we didn't attend the stock count, how will we know what the inventory is? So I always just think to myself about that. I know it's not a requirement for the independent reviewer to attend the stock take, but I always ask myself after year end, what would you do if you can't prove the inventory existed in any other way? Okay, so a lot of the questions really just helps us to consider whether there are any other matters, any other things for us to take note of that might help us to either identify qualitatively material items or otherwise items likely to be materially misstated. Then here for question 4, I activated this to show you when we have the question, are there any other significant disclosures in the financial statements not related to the financial statement item? In other words, we're not talking the PPE note related to the PPE line item in the balance sheet. We're really talking about other type of disclosures that also needs to be considered. Then we can make it a yes, and we will then have these other sections. Now I'm going to activate the first one for us just to see how we can treat this one or how this is treated in the rest of the product. We also have so-called significant other areas in the financial statements not dealt with elsewhere, but remember that that would be in addition to other disclosures. So practically speaking, you actually now have, I almost want to say, 6 options of extra sections, extra disclosure, extra content in the financial statements that's not linked to a specific financial statement line item. Okay, so you can have other disclosure 1, 2, 3, other area 1, 2, 3. Then are we placing reliance on any other work by others? And here they just almost like group together the other practitioners, experts, service organizations, internal auditors, etc. And then we'll take it from there. Okay. Considerations about the entity, transactions here, for example, this almost makes me think of the inherent understanding of the entity from an audit, where we are saying what is the nature of the business, what are the accounting and reporting considerations, describe the business environment. It's almost like where you're documenting your understanding of the business itself in, again, identifying areas likely to be materially misstated. Okay, any going concern, possible events, questions about that. Are we going to use budgets or forecasts? I said yes, so that we can see how that also plays out in the questions and in the steps. Of course, if the budgets are not, or the forecasts are not actually reliable, then we might choose not to use them. Or maybe the client doesn't have budgets, then we also can't use them, right? Then are there any significant transactions that are outside the normal course of business for the entity? I said no, because if there are, then we need to again consider if they are likely to be materially misstated. I indicated a few things with regards to shareholder and directors meetings, and I said that our client does not have any of these other, I was going to say funny committees, not that they're funny committees, board committees, because we have a relatively small board of directors. Okay. A few accounting questions. The client will present a statement of cash flows because that is what IFRS for SMEs require. Then the next point in our document manager is to perform an analytical review. Now, this document, or the layout of this document 1052, was developed specifically for independent reviews. That doesn't mean that you have to use this document. It is something that can be very valuable and can provide you with a lot of valuable information. But I also know that many firms don't necessarily use this at this stage in the review engagement. Okay, so I'm going to explain it to you, but if you, it's not prescribed. I mean, the standard doesn't say this is the level of detail that you need to go through. But I do find it to be very valuable. And I think that if you have this level of understanding of your client, in the planning stage of an independent review, you're just going to be in a so much better position to be able to really identify items likely to be materially misstated. All right, so what do we have here? When we get to this document, you have the current year balance and the prior year balance. Sorry, other way around, prior balance and the current year balance. So 2021, 2022. I'm lying now. This is 2 prior years. Okay, we are going to work with 2023. With wrap up, of course, we have a April 2023 year end. So here we've got 2 prior years to be able to determine that. And then in terms of the estimate, because with analytical review, in this case, we are developing expectations. When we are going to develop the expectation, we are going to have the option to either estimate the amount for that year or the percentage change from last year to this year as an estimate to compare to the actual, or the rand value change. Of course, rand, because I've now indicated South Africa. If you are from another country, you'll indicate what country that is, and that will then obviously modify the currency. All right, so let's say for property, plant and equipment, we are going to estimate the amount at year end. So you'll see there's not a change. We're going to estimate the amount at year end. Now I'm just going to thumb suck a number here. We are going to understand in a real environment, we are going to understand what happened in the business. Maybe they bought something extra. Maybe they sold a lot of their assets, things, whatever the case may be. And let's estimate they are going to have 23,500,000 Rand worth of property, plant and equipment at year end. Okay. I will use the field to the right to explain my calculation of how I got to this amount. And I've got the field there to document and comment on how I calculated. Of course, I can also include a link to a working paper on the very far right. I can get to that. Okay. That's the amount. The second option is to do a percentage change. Okay, loans from shareholders, obviously that's going to look silly, so we're not going to do something there. Of course, there must be a value this year, so that's very difficult for us to determine. But let's say inventory, we're going to do a percentage change. We looked at the percentage of the revenue or this or that or whatever it is, and we're going to estimate there's going to be a 3% increase in inventory holding at year end. So you can see it's a percentage. Again, I'll explain why 3%. Increase, not decrease, etc., etc. Explain that. And then the last option is the rand amount change. So inventory or trade receivables rather didn't go from 20 up or down by a percentage. We're not going to estimate the value at the end. We're going to estimate the rand value change. And let's say that's 3 million Rand. We went to go look at how much the revenue went up by or whatever the case is. And we're going to estimate trade receivables are going to increase by 3 million Rand. Or decrease by 50,000 or whatever the case may be. Right, and that's how we're going to go through all of the points. You have this comment field at the totals, the current, non-current, and so forth, but that's not to calculate an expectation. So you might include it there, but you don't necessarily, I don't know, you might not necessarily want to or need to document anything in that case. Once you've then worked through everything, so this is your statement of financial position, you'll work through your statement of comprehensive income, your income statement. Once you've done all of those, then you will click on this top button to say done with developing expectations. And this is our expectation development page. Once we are done with that, we're going to go to the results page if you want. In the results page, we can then see our expectation versus the actual. Now, remember, I promised I just thumb sucked the number. I couldn't remember what the actual number was. So obviously I'm far out, but you can see that it actually went down in 2022. And the question then is to say, what did we use to calculate our estimate of 23,500 or whatever it would have been? And then to say, should we have actually, did the information that we use in our calculation give us the right answer, and so therefore there is a possibility that this balance is materially misstated? Or was there something wrong with our estimate And do we therefore need to go and amend our estimate? But not just to make the numbers agree to each other. That's not the point. The point is not to just make the two actually match together without a material difference or something like that. It's to actually have evidence and understand what went into this analytical review procedure to get to the calculation and then to see if it's different or not. Right, so I want to reiterate again, if there is a difference, it could be indicating that there's a possibility it's likely to be materially misstated. But it's also possible, especially if maybe we try to go a bit faster, it's possible that our expectation may not have been accurate enough. And that might be the problem in creating this big difference. The next thing is that we now have a second field to document our comment on the actual fluctuation. In fact, you can see here also that you can document or comment on the actual fluctuation between this year and the actual. So you'll have your first field for what happened, or what you used, how you calculated the estimate, and secondly for your fluctuation. What is your takeaway from this difference? And of course, if you need to go and record a matter likely to be materially misstated. And then you can still use this field at each of the total balances to comment on your fluctuations, on what you found for the year, etc., etc. Okay. Then if we think about the DuPont analysis, right at the end, the DuPont is probably not necessarily as useful for us in an independent review, but it's still there. You can use it. Maybe just to explain the way that it works. The DuPont starts from the return on equity, right on the right-hand side, and then basically breaks up the ratio of the return on equity into sub-parts. So if we take, for example, if I increase the thing again a little bit, return on equity is made up of the return on assets and the debt equity ratio. Then we take the debt equity ratio and we break it up into total liabilities and equity. Equity is now broken up as much as it could be. Total liabilities is then broken up between current and non-current liabilities. And then we can also get, like, let's say, for example, ratios. So the current ratio is between the non-current assets and the current liabilities, or things, current assets and current liabilities. I wanted to say something strange there. Asset turnover is then again something that comes from the return on assets. Return on assets is net profit margin, asset turnover, and we break each of those up. And so we go on all the way. Something that's at least clever in here is that if I have revenue, for example, and I'm commenting on why revenue went down by 3%, revenue is, I think it appears 3 times. So if I document, I'm just going to put comment here. If I put my comment in there once, it will actually go to the other field. So you don't have to do it over and over and over in the same place. You'll basically be efficient, but then explaining or getting understanding, getting reasons for why these things have changed and so forth. And that will then drive you to determine whether there are items likely to be misstated. As we mentioned now already, that's what we ultimately want to do. And you'll then have to go back to your previous tables or maybe to gathering information or somewhere else where you will find your likely to be misstated or your record buttons so that you can record items likely to be misstated. Right, so that's 1052, your analytical review procedure. So really, it's almost quite quickly that we're getting to a point. We don't have that detailed consideration of what went into each of the accounts, things like that for an audit. But this analytical review is going to take a bit of time if you need to go through enough detail. All right, we've already mentioned that these optimized documents we can move out. We can move them away. We don't need them in our file. So what's left then is the overall materiality assessment. In the overall materiality assessment then, we will go and calculate the materiality for our review engagement. Now, the materiality for an independent review does not have performance materiality. So you'll see that I almost want to say the methodology for calculating materiality is a lot easier. Still using benchmarks, still using ranges, but we don't have a performance materiality. We just use an overall materiality, and then we calculate the clearly trivial to use during the evaluation of our misstatements. So you might already be familiar with this document where we say, use one of the ratios, one of the bases. And again, remember the bases are set in the firm settings. So you'll use the relevant bases. In this case, I'm going to use revenue. Then I'm asked to document why I chose these. So why did I choose the current year figures? Because. Why did I use revenue? Because. And if I use a prior year number, then the why did you use the prior figures is also needed to be explained. And let's say, I don't know, let's say I also use net profit before tax. It will also ask why net profit before tax. Right. I'm going to try and make it simpler. Just use the current year number. Then also consider qualitative factors. Now, again, we've already mentioned qualitatively material. Otherwise, in terms of when we have to also consider material items, information that will help you to identify when something will be qualitatively material, or even qualitative factors that will determine where you're going to choose your materiality figure. We can see in 2022, this has rolled forward from the previous year's file. Materiality was set at R1 million. So this year, the revenue came down slightly. The range is still 550 to 101. So we might decide to still go with R1 million. Obviously, R1 million is a nice number to use in trading. So that could also be a reason why we're going to go for it. But of course, in the real review engagement, we need to document it a bit more carefully and apply a professional judgment. Clearly, trivial is still set at an amount between 1 and 5%. The firm settings is set by default at 3%. So unless your firm changes it in your firm's template, it will probably calculate as 3%. And in this case, therefore, clearly trivial is 30,000. Right, and that's materiality. There's no performance materiality, anything like that in an independent review. So it's nice, quick, and clean. Right. The next point for us is identifying material items and areas likely to be misstated. But I do see that it's already gone 2 o'clock. So I think let's take a comfort break. And then when we come back and we've stretched our legs and maybe moved a little bit, then we will tackle how do we complete this document likely to be materially misstated and material items. And then we'll jump from there, go straight to the work programs. Right. So let's be back at 2:15. Comfort break then until 2:15. Enjoy your break. Ladies and gentlemen, I hope you had a good break, leg stretch, anything else you needed for the session. I received a question in the chat. Thank you for that. So the question is, do you need for an independent review to send out an engagement letter every year for the client to review and sign? Now, you don't actually I almost want to say for any engagement, need a new engagement letter every year. I think the difference comes in between an audit and an independent review is with an audit, a lot of stuff will stay the same year on year on year on year. But with an independent review, and I've got a slide on that in the theory slide, so if you want to go look at that again. But there are a few more things that could change from year to year in an independent review that may require you or prompt you to actually issue an independent review more regularly, I almost want to say, as an audit. And I say that with a lot of caution because for me personally, I always preferred a new engagement letter for every year, just because it felt to me that then I was double sure that I had the latest information. But of course, that's a lot of administration. So for an independent review, you are quite reliant on management's information that they give you, because you can't just say, you know what, even if management didn't quite tell me the truth, at least I am still going to tick and bash the invoices for sales so I can confirm whatever information. If they didn't tell me the information, I'll probably know the right information from seeing the invoices or from reading the rental agreement or whatever it is. So with the independent review, because you are relying so much more heavily on management's answers and things in terms of inquiries, you really are reliant on management, on management's integrity, on management's responses and so forth. And so therefore, the standard actually says even if there was a significant change in management, you should actually consider sending a new engagement letter. Some of the other, reasons are actually very similar for audits. You know, if the engagement partner, in this case, the independent reviewer changes, you'll need a new engagement letter. And then practically from a firm management perspective, if the letterhead changes, if you have new directors to the firm or you have a director that retires, and so the letterhead changes and the directors in the firm changes, then you'll also update. So the short answer is no, you don't need one every single year. The longer answer is just be careful. There may be more scenarios where you might need one than what you might think there's going to be. So I hope that's given you a little bit of information there. Good. So back then to our caseware file. We completed the materiality assessment in the previous round, and now the next step then are our audit, our special independent review documents. So this identify material items and areas likely to be misstated. Now remember, we haven't recorded any areas likely to be misstated, and kind of intentionally so, because I just wanted to go through what was in those documents in the flow of the information, and we'll now see what is in this document and how to record these items. And then, of course, just after that, basically, because we have completed the planning section, you'll then also have your engagement quality review document for the planning section, where the reviewer, if you need one, has to then complete that document as proof of their review. Only if you need an engagement quality reviewer. So if you don't need an engagement quality reviewer, you don't have an engagement quality reviewer in terms of your firm's quality management policies, then that is not completed. No problem. All right. But let's look at 1070 and see what is in there. Identify material items and areas likely to be misstated. So here we can see a lot of sections, right? Every single section is in there, but not all of them are activated. So again, the blue sections, they have not been enabled for us. So you can enable them. Let's say, I always like to use the example of where maybe the client has a property that is currently listed at property, plant and equipment, but actually it is an investment property and you reallocate it to investment property through a journal entry. But because it is a reclassifying entry, it's not going to actually affect your planning numbers, your preliminary numbers. So then that, I don't know, let's call it 3 million rand property will still be lying here in your property line. So only if you could possibly remove it from the property line to the investment property would the investment property model line actually activate. You could do that. Let me maybe thinking 120 things here. If you use other entries to then process that entry, let's say the preparer of the financial statements, the compiler, puts through that entry and says, actually, this building is investment property, and so therefore puts through a reclassifying entry on the to get the financial statements correctly done. And you've now already started your independent review planning, maybe, and now get knowledge that this was incorrectly done. Then you can put it through as an other entry, because adjusting entries is going to only adjust. Let me quickly just show you actually. We were in 1070 just now. I can show you the lead schedule actually. If you look at the lead schedule, your preliminary are the numbers that you imported and then any of those other entries. Your adjusting entries are your reclassifying entries, basically your mistakes that you found during the engagement. So if you were to, in your caseware file, put through an adjusting entry, it's going to go through that middle column, which will not reflect in your planning numbers and not reflect in 1070. Right. So to have the numbers in your preliminary column updated there, you can see also we don't then have actually, if we just make those ones smaller, we don't actually have investment property there at all. There's leasehold improvement, but there's no other investment property items there. Okay, so then the section won't be activated. We could enable the section, right? That's quite possible. So actually now I know it should have been there, it's not there, etc., etc. But the lead schedule is going to be, the preliminary column of the lead schedule will be empty. All right, so that's possible. Then you can see that this little plus sign is not actually active. The section has not been enabled. It almost looks like it's enabled, but it's not really enabled. So the best way to then get all the sections to show what you should see is to basically just quickly come and expand all, and then you can see, let's call it the real sections. Not that the section wasn't real before. But if I maybe just minimize investment property, we can much more clearly see the distinction here for property, plant, and equipment. So what can we see? We can see the line and the lead schedule link. We can see the balance for the last 3 years. We can see it's come down this year. And we can see that it is material. It's a material financial statement area. Remember, our materiality is R1 million, and this balance is more than R1 million. So because it is a material financial statement area, the required procedures for material items have been switched on, have been activated in the work program. Is there an item likely to be misstated? We don't know yet. Maybe, maybe not. Right. Let's say there is an item likely to be misstated. We know that the client is not very good at recording useful lives and residual values. And when we looked at the fixed asset register, we looked at the draft financials, we saw that, yes, the total inventory, listen to me, the total property, plant, and equipment did come down, but they actually had a very big sale of something and then bought something else new. And that is a material item. Let's say it's a machine of 2 or 3 or 4 million rand. And that machine, we need to make sure that they've applied the useful lives and the residual values appropriately to those, because that could potentially lead to a material mistake. Maybe not this year, but in time to come, the cumulative effect could and possibly would be material. So we're going to say item area likely to be misstated, and we'll select that record button. All the yellow line says just is the risk mode is now active. Click here to exit. We don't want to exit because we want to record the item. So add an item likely to be misstated. The source, we were in 1070 just now. What is the area likely to be misstated? Well, PPE bought a new machine and the client historically did not record useful lives accurately and recorded residual values at R0. Let's make it null like that. Okay, so obviously you can imagine if you have a 3-4 million rand machine that they are buying and they just write it off to 0, that's going to be quite different to if you are writing it off to the real residual value after a certain number of useful lives and possibly writing it down to, let's say, 1.5 million only. Your depreciation is definitely going to be materially misstated. Your cumulative, at least, yeah. Cumulative depreciation is going to be materially misstated. Right. Then you need to design procedures to respond to that process, to that risk, to that item likely to be misstated. So what will your focused inquiry be? Inquire what the client determined the useful life and residual values to be for this new machine. You can probably come up with somewhat nicer wording, but that thing. And then in terms of analytical procedures, well, maybe compare the residual value of the item that the client determined to other items on marketplace or something like that. Other items available for second-hand purchase in the market, something like that. Don't know if you're going to go on marketplace or wherever you're going to go, but something like that. Okay, so we'll specifically design procedures to address this concern of ours. We're not necessarily, we're not at this point designing, I almost want to say detailed verification steps, but we are just designing inquiries and analytical review procedures to specifically address that matter. Okay, once we've done that, submit that item. And now you'll see that now we no longer have the no items likely to be misstated line reflected there. It will in fact show what is the concern we have and the focused inquiry and the analytical review procedure to specifically address those items. Let's go and see what my work program is going to look like. Because my expectation would now be that these specific inquiries, specific analytical review procedure, as well as the required procedures are going to be included in my work program. Just waiting for that work program to open up. There we go. Good. So we've got the review procedures. We firstly have our item likely to be misstated. There we say PPE, bought a new machine, blah, blah, blah. First, compare the residual value of the item to the other items available for second-hand purchase. So that is my analytical procedure right there and then. Then the required procedures, and these ones are activated because it is a material balance, right? So for a material balance, we now have items. Obtain a list of property, plant, and equipment with comparative figures applicable for the previous year and, if applicable, for the previous year, and then go and do a few things. And you can see then, you'll notice there in 2B, we refer to budget. Remember, we said we're going to use the budgets and the forecasts, so we can compare the actuals to budgets. If we said we're not going to use the budgets, it would not have prompted you to go and look at the budgets. Investigate significant items, etc. So here we are performing a few more detailed procedures for material items in order to conclude if we've identified items likely to be misstated. Right, we can see we're also going to the draft financial statements. And question 3 says complete the focused inquiries document for property, plant, and equipment. We're going to go there just now. Right. I want to conclude or first complete in here, but now we have to consider the results of the focused inquiries when we are concluding here. I just don't want to run between all the documents all the time. So for now, we're going to conclude. Firstly, did the results of our procedures indicate anything that needs us or that will prompt us to go and do anything more? Matters to be communicated with those charged with governance. Any fraud matters, previously unknown laws or regulations, related party disclosures or transactions that's not been disclosed to us before, and so forth. Any of these things. If I say, let's say, for example, subsequent events, yes, then it's going to prompt me to go and record an instance or an event for subsequent events. Right, so each of these are basically going to have something else that needs to happen. If I say I have identified suspected non-compliance with laws and regulations, it's going to prompt me, it's going to tell me what to now go and do to address the suspected non-compliance. There's a space for me to go and respond to NOCLAR, of course, in line with the Code of Conduct. Right. Further analytical, anything, did it indicate that further analytical procedures are required in order to obtain sufficient appropriate evidence? Have we identified a reportable irregularity? Anything like that. Okay, so those questions really just prompting us. And then the conclusion. This is almost like a mini review conclusion, but now specifically for property, plant, and equipment. Did the results of the above procedures indicate that the financial statements may be materially misstated? Remember, we concluded, we said earlier on in the slides that the whole point of the review, let me go back there, is to go and say, once we've identified a material misstatement, we ask ourselves, not a material misstatement, once we identify a material section, we have to perform procedures until we get to the point, is there anything likely to be misstated? If so, we will go and record the likely to be misstated and do work. If not, that's the end of the work. So we, in our work program, if we say no, that's the end of the work. Happiness, sign off and everything. However, if we say yes, then we need to go and do more work. Then we can't sign off and just be over and done with. So then we'll be asked, provide details of additional discussions with the client about this potential misstatement. You'll document there what additional discussions you've had, maybe additional things, and then if considered necessary, select additional procedures to be performed. So here we ask ourselves, required procedures, can I perhaps here just add extra procedures in? So especially if we think about more analytical type procedures, things like that. But then in our conclusion, this additional procedures is almost where we're going to do verification type procedures. So almost audit type procedures, ticking and bashing, selecting maybe a sample of items from the list of property, plant and equipment and recalculating and really going into getting our hands dirty now. To get to that point, again, if I can remind you of the slides, where we've identified an error likely to be misstated, to now say, likely to be misstated, now we have to do specific procedures until we can get to a point of either saying, okay, false alarm, it's not material misstatement, or actually, yes, now we've proven it is materially misstated, and therefore we are going to modify our audit opinion. All right. So that being the important point there. Right, let's go back to the work program. So if I add additional procedures, then I'll literally have another section that's going to appear here with another heading, not there, above the conclusion, another heading with, I just want to say, absolutely nothing in there, because the software cannot predict what it is that you're going to have to go do. What will be the specific procedures that you're now going to have to do extra to go and get to the bottom of this issue? Go and investigate, go and verify. Is there a material misstatement, or are these initial concerns that you had not necessarily indicated as a material misstatement? Okay, so that there, and then at the end of the day, where before we said, did the results above indicate in financial statements to be materially misstated, yes or no? So that was an indication. Now we carry on until we get to that point that no matters were identified that are likely to cause the financial statements as a whole to be materially misstated, or the matters identified in this section is actually causing the financial statements to be materially misstated. Let's hope we've done enough work to get to the point of saying no matters were identified, and that's happiness. Okay, then we can still get to a clean opinion, unmodified opinion. But if we do conclude it is materially misstated, that will obviously modify the audit opinion. Right, so that's, I almost want to say, overall the whole journey that you can take. What I did skip earlier on was with required procedures, where we spoke about the focused inquiries document. So we are going to look at the focused inquiries document. I just want to finish working through the likely to be misstated document quickly, but we did now see that when we select likely to be misstated, that procedure is actually appearing in the work program. Material items has the procedures, not many procedures, but still a few procedures, and then how to conclude in the work program. So if we go back to, not to the slide, we go back to 1070. For property, plant and equipment, we had recorded a matter likely to be misstated, and that's how the plan planned out there. For investment property, okay, you will see that because there's no balance, it's obviously not possible to be material. And if we had not recorded an item likely to be misstated, and that's also why the section was actually switched off, we don't even have a work program. You can see there's just nothing. Okay. I'm going to actually disable this section, but I can also go and show you in the work program section that the work program is literally blank. It says there's nothing. Okay, we'll look at that later on. If I go to, let's say, loans to stakeholders. Okay, loans to stakeholders is not a material section. No items likely to be misstated. Oh, yeah, sorry. We want to exit this mode. I clicked the risk dialog by accident. Okay, we want to go to loans to stakeholders. If we go to loans to stakeholders, there's no areas likely to be materially misstated. Now it has actually recorded. Let's just delete that one blank line. Okay, that's what we want to see. So for loans to stakeholders, nothing likely to be misstated. There is a balance, it's not a material balance. So this is even different to what we had with the investment property on the cost model, where there was no balance. There we didn't even have a hyperlink to the work program. So in both of those cases, our expectation would be that there's not going to be any work in that section because we haven't identified an area likely to be misstated. It's not a material item. So we don't expect to perform any work on this section. Remember, up to this point, I would have done analytical review procedures. I would have done some inquiries, but I don't have to do that much because it's not going to be a material account. If I do expect this account to be materially under-recorded, understated, that's a different matter. And then I will probably identify or record an area likely to be misstated. All right, so let's go see what this work program will look like. No material item, no area likely to be misstated. We don't expect any work to be required for this item. You can see that in order to really identify all the areas likely to be misstated, we really need to be careful, or we need to ensure that we have performed enough analytical review procedures to get to that conclusion. But you also don't have to do too much for sections that are not material. That I also want to say that's never going to be material, never going to be a concern. All right, let's see what this work program looks like. We're not really expecting much. So this one, a section. During planning, it was identified that this section is not material or likely to be misstated, and therefore no further audit procedures are required. However, you have to come sign off this work program to say, have you, during your review, identified adjustments which would result in this section being material? Okay, have you? Yes. Then if that adjustment makes it material, now we've activated required procedures, and now you will go and do exactly the same things we saw earlier on with the property, plant, and equipment one. Same conclusions ultimately until we get to the point of, did the results of your procedures indicate the financial statements may be materially misstated? That's if you say, yes, initially in our plan it wasn't material, but now I've identified something to be material. However, if I say, I didn't identify anything material, there were no adjustments, so no. Let's go back to, this was what it looked like initially. During planning, it was identified the section is not material. We did not identify anything that's going to cause it to be material. Happiness, end of story there. What was the second part? Likely to be misstated. So have you, during your review, identified issues which now makes you believe that the section is likely to be misstated? Because if it is likely to be misstated, we are going to have to record an item, LTBM item, and we're going to have to do the audit work. If not, we'll sign off, and that is our sign off on the work program for loans to stakeholders work program. So what you'll see here is that you have a work program for every financial statement line item that has a balance. But where there's no balance, you're not going to have a section. Okay, you're not going to have a work program with content in it. Okay, let's go back to 1070. So we had loans to stakeholders, nothing. Work program just needed basically a conclusion. PPE, we had both the likely to be misstated and material, and the work programs had to be completed. I want to quickly just see another section that has a balance. Trade receivables. Okay, let's see. Trade receivables is material, but there's no likely to be misstated. So there we are expecting the material items, but not the first line where we had the likely to be misstated before. Just waiting for the work program to open up. It obviously takes a little bit of a half of time to open up because we are now opening, closing, opening, closing. Good. So here we've got the review procedures required for a material item, trade and other receivables, get that list of trade and receivables, age analysis. We'll look at the completing the focused inquiries just now. Conclusion part, again looking, and did we identify areas likely to be misstated? If no, that's the end of it. Okay, I'm now basically skipping. I'm skipping ahead. You'll complete all of these procedures for the required procedures and conclude. Was there exceptions? No. Sign off, reference to the work paper, and all of that. Okay, but that just to show you the methodology part in the conclusion where we will add on to the work program or not. If I have, I'm now wanting to just quickly see a work program that's not material. And we'll be going to record an area likely to be misstated. Okay, here we have loans from stakeholders. Let's say this is not material. Let's say we are concerned that maybe that balance wasn't paid off. So we're going to add an item to say, record my LTBM here. So you're going to document your careful item, loans from stakeholders. Previously, we were just also still loans from stakeholders, but it was the other side. We're going to document, not cost of sales. So what happened here, this is just a side note. I was still standing in that input field and then I tried to move on. If I'm done with that input field, I must actually just exit from that input field, because if I then click next or click anywhere, then it will just go and click any random place. And that's what happened when it ticked the cost of sales now. Now I can actually scroll down and go and document my focused inquiry for the LTBM. For this was a loan from stakeholder. Okay. Whatever your inquiry is going to be, analytical procedure, my analytical procedure for the LTBM. Okay. Record that item. It's not a material item, so we actually just expect now the likely to be misstated response. So just an additional inquiry, maybe an analytical review to go through there. So the blank one you can just delete every time. If I remember correctly, that was I want to say a known issue from the release, where it records an extra blank one every time you record something. Right, let's see what that work program looks like. And then we've pretty much covered all the different options of what you might expect work programs to look like. Just waiting for that work program to open up. It's coming along. There we go. So here, literally just that one likely to be misstated procedure for us to perform. Short and sweet. Do that, do the analytical procedure. Of course, you can always add to them, right? So you could always edit the procedure, things like that. Yeah, and then of course, again, if you have material misstated items, you can add, conclude yes, otherwise no, right? That is when you only have a likely to be misstated item. You could also in your planning already add additional analytical procedures if you wanted to, if you needed to. What I wanted to also just show you, we spoke about the other disclosure item earlier on. Remember when we said the other disclosure where we had those 6 extra sections or lines of disclosure? You can do the same for that as well to consider. For statement of cash flow, we also had those items, there. I can, however, because there's no balance, you can see with statement of cash flows, I can actually mark it as a material item. So there's no balance that's going to drive it or make it material. I'll mark it as material for statement of cash flow, and the same for that other disclosure. There's no value there. So if I regard that disclosure to be qualitatively material, then I will tick it to be qualitatively material. I could technically have done the same for the stakeholders as well. We said, let's just test it to say just a material likely to be misstated. It wasn't material, so I could technically also say actually it's qualitatively material. And now the work program will also have the materiality steps there, or the procedures that is activated because it is a material financial statement item. Okay, right, so that could also be the case. All right, so that is all the different options then in identifying material items and areas likely to be misstated and the combinations there. And that is then the planning. So we did now kind of skip ahead to the work programs, but that's basically knowing what's going to happen in the planning section or in the work programs once I've done the planning. And you can then also see, and I happen to land on the slide, but you can see now how everything we've done in the planning stage starts with understanding the entity, doing initial inquiries, doing analytical procedures to then go and identify these items and get to the conclusion. All right, let's look at the rest of the file. So that was section 10. I mentioned earlier on section 11 is only for audit. So you can see it's all optimized out. So we don't have to do anything in section 11. We also don't have to do anything in section 12 for an independent review. But we do have to go and work in the worksheets, in the work programs. So first of all, the general work programs, that's there where we're first going to have our focused inquiries working paper. So let's go and see the focused inquiries working paper. We had, each time we had a material item, it said go and complete the focused inquiries. And then also for our likely to be misstated, we could have included then a focused inquiry to specifically focus our inquiries, you hear the words, on the specific matter that was questioning or that was concerning us about that it might have been likely to be materially misstated. So that's almost like more work program or a list of discussions to be had with a client or to complete what we have asked the client already and the responses from the client. You can see that what that looks like just now. There we go. And so maybe if you haven't performed independent reviews for a long while, when this document was developed many years ago, I'm talking 2011, 12, when this document was initially developed, it was a separate document that we used in every section. So you had to basically make copies of the document to every one of the sections. It's now been merged into one document, and you'll see on the left-hand side with your document map here, you've got a section, a section for every one of the accounts or line items or financial statement accounts that have balances for which you either material balances, so we were prompted each time to go and do the focused inquiries, or where we had it recorded an item likely to be misstated and we had to go and do an additional inquiry for that. Okay, so very similar to what we had earlier on with discussion with management and those charged with governance. How will it be completed? Do you want a response column for the reviewer? So if we say no, it literally takes away that extra column there where we are documenting our response, our conclusion, our application of our judgment based on or in response to what management has said, maybe leaving a space for the client, for the interviewee to sign, and then document again who we interviewed. Then we start. Property, plant and equipment, a list of the standard questions. Now these questions or these points come from ISO 2400 that says you need to inquire about the following: any significant, unusual, complex transactions. Describe the extent and nature of journals and transfers. Is there an indication of the assets or the group of assets may be impaired? asking the client all of this information, because remember, you're not going to go verify the stuff. You're not going to go and audit the items. You don't have to go and inspect the property, plant and equipment. So your only real evidence is the discussions that you are having with a client here and your analytical review procedures. Then we've got that one focused inquiry that asks, where I just documented, inquiry what the client determined the useful life and the residual values to be for this new machine. What did they determine? How did they determine? Maybe something like that. Then to document whether that's indicating a likely to be misstated or whether that's causing any further problems. Of course, with a likely to be misstated inquiry, it will be kind of silly for you to go and record another area likely to be misstated, but this will then lead to or help you or have an impact on your conclusion in the work program. All right. For inventories, we didn't record an area likely to be misstated, but it was a material balance. So we have the same questions, only just now obviously applied to the inventory section. Same questions, but no inquiry for LTBM. Okay. Same with cash and cash equivalents, trade and other receivables. We had the work program for the material item. It prompted us to come and do the focused inquiries, which we are doing here. So forth. Loans from stakeholders, we didn't have the material balance, but we did have the specific procedure in that work program. And here we have the extra inquiry from the client. Okay. So each of those sections will really just have all of the focused inquiries. I know this feels like, I just want to say, sounds like a lot of questions. And I remember earlier in the year in one of the European countries, they we're basically launching or implementing legislation that would allow a number of businesses that previously needed an audit to have an independent review. Pretty similar to what we went through in South Africa in 2010, 2011. And the one partner was quite keen on this independent review thing. And then when he saw this list of questions that he had just to ask the client, he actually just said to me that he thinks a lot of clients would rather just want an audit than being interviewed so much or being asked so many questions. So I realized I almost want to say the effort that goes with getting the information, getting the input from the client about all of these inquiries. They do, however, come straight from the standard. The standard says you need to get an understanding of these. And how will you get that understanding? You'll get it through inquiries from the client. Okay, focused inquiries, because independent reviews are primarily inquiries and analytical review procedures. All right, let's look at some other work programs, still in the general work program section, which will always be completed. So these ones are not driven by, is it a material balance or is there something likely to be misstated? This is stuff we always have to do. So the accounting records work program. Okay, that one will deal with what is required in the accounting records. And so we'll see just now some steps there again to just prompt us to go through those. Here we go. So very few procedures, but we do still need to do them. By inspection of the general ledger, ensure that the ledger is updated frequently, reconcile general ledger accounts are cast and balanced. Scrutinize the ledger for any unusual or large transactions, make inquiries of individuals involved in the reporting process about inappropriate, unusual activity relating to the processing of journal entries. That sounds familiar, eh? From an audit perspective, we're also concerned about journal entries. Then some conclusion questions about the results, and then if any of this indicates the potential for the financials to be materially misstated. And the conclusions, again, the same. If we say yes, we're going to record an item likely to be misstated, we're going to have to respond to those. Okay, perform additional procedures until we can conclude. If we say no, that's fine, fine, well, and we can sign off. Okay. That's the accounting records. Then the others we have is opening balances and comparatives. We have financial statement preparation work program. I'm going to skip the opening balances one, but I want to show you the financial statement one. There's also one on laws and regulations that you'll see there, 20.10. That will really just test or prompt you for questions about the Companies Act, the the board meetings, the shareholders meetings, things like that. So also very few questions, but they are also listed there. So those really being your 4 main ones. Again, you can really move the others then out to the unused folder that we have at the end. But there are those 4 that we still have to complete, even though they're all teeny tiny. Really not a lot of questions for us to complete. Right, financial statement, I feel quite strongly about this one. So remember that when we are doing the independent review, we have no involvement in the compilation. So we really have to really review the financial statements. Right, that is like, I almost want to say, one of your main procedures. So you've got to agree or reconcile the financial statements to the trial balance and then document this in your review file. We also spoke about how you need to reconcile and check that everything crosses and whatnot. You have a number of prompts here about how to review the financial statements, check that the accounting policies are there, look at the notes. So really just generic prompts, but still important for us to show that we've actually reviewed the financials that were prepared by someone else in order to then conclude on that. Good. That's the general work programs, and then we have all of the work programs that are grouped according to the categories, the mapping, things like that, and each of them will then have their work programs in there. Right, that's the execution, the performing of the audit side, right? We then moving on to finalization. I just want to see the time. We are still doing good for time, so let's move on to finalization and have a look at that. So things that are relevant here would be, of course, your partner sign-off. I want to look at that one at the end. Your subsequent events work program, it works exactly the same as the audit one if you are familiar with that. So a few prompts again for you to consider if there are any subsequent events. And again, that one, subsequent events and going concern, I think I said it in our theory one as well, but the standard, the financial reporting framework prescribes the way that those must be applied. So we are always just checking that the client has applied them, or asking questions, doing analytical review to check that the client has appropriately applied those principles. So we don't have to, so when I say check it in detail, but still we have some responsibilities. Okay, so here again, explain the procedures that were established by management. So we needed to ask them that, and we'll just explain them. Inquire about events after year end. Inquire from management whether there are any conditions related to business risk. Few of those things, and then if there are issues, then we will record them. Very simple way, really, of recording. Just saying what the event is. Source documents, always you can just double click. The same with when we recorded the likely to be misstated. I'll document the event here. Event that occurred after year end. So let's say the client, the big debtor went into liquidation or whatever. What is the financial statement treatment required? Maybe they weren't even behind. There was no indication or anything. It was fine. So then we can't. It wasn't a matter that was already what is the word? Already there at year end, already active. They were just still paying their balances every month. There's nothing indicating to us that they were already not, impaired. And so therefore, maybe we can't write that off, but we will say the last month's sales is possibly not going to be recovered. So, some note there. But if they were current, they were paying their monthly ones, there was nothing indicating that they were supposed to be impaired at year end, then we can't write them off. And then to see what they did treat, how did they treat that in the financials, and concluding on whether that was done properly. And then we go back to the rest of the procedures. So then we have the events. we have the procedures, and that's really the conclusion. That's at the end of the day, is to say whether the financials are correct, and if that's the only subsequent event item, that conclusion will be sufficient. Okay. That, as opposed to when I deleted this item, just delete that item and actually just select the blank one, and I delete this row. So you can see I can only delete it when it's blank. If I delete that row, then we are back to the conclusion saying there was no subsequent events identified. Okay. So that's a subsequent event. It's not important. It's just very simple, very obvious. Go through a few of those procedures. If there's nothing, it's fine. The going concern conclusion principle's the same as with the audit one as well. We identify did management do an assessment. That's their responsibility. We see whether there's any indication that maybe the entity is not, and you would have also seen those questions in every work program where we had concluded to say, have you identified any events that's indicating that maybe they're not a going concern, that we should be worried about it? If you hadn't identified anything, fine, then that's the way it is. Okay, let me just make this a little bit bigger. Not many steps for us to consider or to perform. We've already really been aware or tried to be aware of it for a long time. So the only extra things is to consider if the results of the final analytical review maybe indicate something, or if you do a final analytical, because you're not required to do a final analytical from the standards. You've already done a lot of procedures. And then based on the evidence obtained, conclude whether any events or conditions identified. So if you have anything, record. Otherwise, you'll have your little prompts there. Okay. Good. So that's really just concluding on whether the going concern basis of accounting is appropriate. Then we have the overall analytical review using the final numbers. So if you had processed any adjustments during the engagement, you will see the results of those adjustments in the overall analytical review. The document layout, however, is exactly the same as we had the DuPont analysis in the planning document. We now have the DuPont analysis in the final document with the final numbers. Just waiting for that to also open up. There we go. You see there also where it says it's not required for a review engagement. You can use it, but you don't have to. So if you want to use this, there you go. It's available. Okay. Then the evaluation of misstatements. That's an important one for us. There we will document not just the consideration of journal entries that were not adjusted, but also misstatements. So it's possible, maybe not necessarily as likely as you would in an audit, but it is still possible that you might come across things that are not disclosed in the financials at all, or not disclosed the way they should be. If you are reviewing financial statements and checking them to compliance with the financial reporting framework, you might also identify things that are not in line with the framework. If you find misstatements in terms of disclosure misstatements, those also need to be logged. So I want to show you where this gets done in the evaluation of misstatements document. So first of all, we have the indication that our planning materiality was R1 million, and we will consider whether our materiality should change at financial statement at finalization stage. It's nothing necessarily indicating that, so we might choose to still stick with the old one that we had as being R1 million. There are adjustments. So now we need to conclude on misstatements in terms of corrected misstatements as well as uncorrected misstatements, and then give an overall conclusion. So that's giving us fields to document. But then we have these tables, and I'm quite fond of the tables in the sense that it really helps us to identify possible issues. So You can make some of the rows hide and not hide and whatnot. And if you wanted to print them, you can choose what's prints and everything like that. What I just want to highlight to you is, for example, in the uncorrected misstatements, these little warnings. Okay, they're not errors, they're not preventing you from doing anything or anything like that. But what these ones are is they are, there's a few of them. Most of them are now the same on our table or on our example, but they'll say something like, for example, the total of your audited, your final numbers, plus the possible mistake or the uncorrected misstatement. If you added those two together, you would get a material influence and a material balance. Does that indicate that the balance is materially misstated? Not necessarily. So the misstated, uncorrected misstatement is 159,000, for example. That's not materially misstated, but the total balance is going to be material and is already material. So we say, yeah, whatever, that's not the end of the world. 4.9 million is 4.9 million. The 150,000 is not going to be material to the user. It's not going to change the economic decisions that the users make based on this information. But it could just as well have been that you had, let's say, I don't know, 700,000 Rand in your unaudited or audited balance and maybe 350,000 Rand in your uncorrected misstatement. And the two together would then have resulted in, let's read this, the aggregate of your proposed adjustment and your final balance is greater than materiality. So had the client processed the, let's call it the uncorrected misstatement of 350,000 Rand, which is now imaginary, that was maybe in the factual or judgmental column, that plus the final audited number of 700 plus 350 would have been 1,050,000. So that's really what it's telling you. But now, of course, in some cases, it's going to be the way we have it now to say what, it's fine. It's the same thing. In other cases, it might be different. You could possibly also actually look at the breakdown there to see where is this mistake. And maybe that can also indicate to you something that you need to know more. If we think, for example, also at the total asset level, you could see something bigger. So not just at the line item, but also at the totals. And then I'm just trying to think what the other ones were. Of course, if it is a material adjustment, there's also some consideration between the corrected and the uncorrected ones. So there's a few of those that will highlight to you whenever there are a few things that's going to make a difference. So those ones are quite helpful sometimes. And then you also have the availability of the conclusion column where you can document some things there to document how you considered each of them. The statement of cash flow cannot be created for you because it comes from the financial statement. So we can't create it for you or populate it for you from the trial balance. So you will have to actually come and type it in here. But then again, it will highlight to you where there may be potential issues, and you'll have to consider that. Then we also have the disclosure table. So this is what I want to get to ultimately, is to say qualitative disclosures also need to be logged, also need to be evaluated, importantly. So if I have an issue, a disclosure item, a note that's missing, for example, I'll add a line in here, and I can then remember the numbers here are sometimes I want to think like almost silly. It's not that they are silly. They could still sometimes be relevant. But here we are talking about there is no note to disclose what. Okay? The whole note is missing. Or the client has disclosed the item, but they forgot to disclose the fair value of the item. Or, this is where you can basically use your words to describe what is the issue in the disclosure. So the balance is not so very important. Maybe the note number might be for the partner to also want to go and see whatever it is, and then to comment and say, how did you consider whether this is fine, the fact that it is not corrected in the financial statements, or this is actually such a big issue, we regard it to be material, and therefore this is actually a material misstatement that we need to take forward. The client doesn't want to add the note in. We believe it should be in there to achieve fair presentation or to be able to avoid any material misstatements, and therefore you'll treat it going forward. Right, so please don't just get stuck in your statements. Remember the disclosure part as well. Then the conclusion questions, very, very helpful for us to conclude and say that we are comfortable that we really have considered the statements individually, in aggregate, omissions, not just too much information, and so forth. Okay, also missing stuff and so forth. Good, so that's your O2 40, the evaluation of misstatements. And then we can come to the consideration of the assurance report. I'm personally very, very fond of O2 50, also for the independent review engagement, because it really helps us to determine the conclusion, the type of conclusion. So is it going to be an unmodified? Is it qualified? Is it adverse? Is it a disclaimer? Your 4 options. But then also to help you to review the report and see that you actually have everything in the report that you should have in there. So let's just see what we've got in there. Right. Did we obtain any evidence that the financial statements are materially misstated? If you didn't obtain any evidence, happiness, no. Moving along. But if you did, then we're going to go and consider, okay, so you have material misstatements. What now? Now you would have seen also that we now have a modified conclusion bookmark in the document map. Right. So let's say, yes, that is the case. Are these misstatements individually or in aggregate pervasive? Let's say no, they're not pervasive. So it is materially misstated, but not pervasive. Then all the other questions will also come in. Do the misstatements relate to specific amounts? Yes, and so forth. Is it also disclosures or narratives? Yes, that's also the case. And so you'll carry on. Few other answers that I've just completed already will be unable to obtain sufficient appropriate audit evidence. So it's not like we had a limitation of scope. There weren't multiple uncertainties. You answer all of these questions. Some of them will come through already. Like we said, it is a fair presentation framework because we use IFRS for SMEs, or the client uses IFRS for SMEs. A number of those considerations. There's the conclusions from going concern already coming through. And then your guidance to say, goodness gracious me. So based on these questions that you answered, you should have a qualified conclusion. Remember, we said material misstatements, but not pervasive, so that ties up to the qualified. Now, when we then go and look at the report, what should be in the report? So let's look at our report and see that the following is in there in reference to the paragraphs in the requirements of the standards. Do you have each of those points? Just I almost want to say the normal generic report. And then because we need to modify, we also have additional questions. So there are also questions in the qualifying questions to say, should you have an emphasis of matter? Should you maybe have a reference to something else? There might even have been comments about, or there was a point also about reportable irregularities, because if that was, then you need to also maybe disclose in your report. So all of those things, and then the guidance to say, is this correctly recorded in your report, in your independent review report? So I'm really quite fond of this because it just helps you to prove that you didn't just grab the first template of the review and just slap it on the file. You actually really applied it to the client's circumstances and to the results of your work performed. Right. Senior's final checklist, that is really just to almost like a quality check if you want to check that you've got all the documentation on file, that you've documented all the relevant points and things like that. So I'll show you quickly what that looks like. Another checklist, also another list of things, could also be that O280, the engagement quality review document. That one treats, remember we had the planning one, 1080, which was about the planning. Then we've got the finalization and the execution, the fieldwork one here in the finalization stage. Again, only if your firm requires an engagement quality review. The seniors checklist is quite detailed, and it really treats every requirement or helps you to ensure the quality is on your file. So maybe a bit more detailed, but definitely something that can help you to ensure that your file will have the necessary quality, the necessary documentation, that you don't have any missing information on your file. Okay. And it's really just a yes, no, and reference it to somewhere. Good. That's the finalization. The client communication, we're going to come back to the partner sign-off that we still want to do. But I just want to quickly just also show you the client communication. We have a report to management and those charged with governance. Now, that management report from an audit perspective has a lot more value where we are reporting on weaknesses and things. We don't really expect to have weaknesses that we're going to find any weaknesses in an independent review. But we can still have an independent review. We can still have a management report in an independent review. It's not a requirement, but we can still have that. Okay. Your letter of representation, we'll also see just now, is obviously quite important. But let's just look at the report to management and see what's in there, so I can show you how to modify it and so forth. All right, so like we had before, we can also change the letter spacing there. But here you've got a lot more prompts to say, communicate the following with the client, communicate the following. That's why everything's in gray blocks. Okay, that already input cells. You're going to have to type stuff in there. Let's say I'm typing my sentence, and then I will right click and remove the enable editing. And that will then, come on. Doesn't actually take that gray away, but it should, technically speaking, remove the gray editing because it's now no longer an input field. Okay. This is not a requirement, but you do have the option, if you come across things, to then, again, like with audit, add the items into a specific table to actually specifically report matters. But the chances of you identifying these things for an independent review is relatively slim. Okay. So not a requirement document, but it is available if you need to or want to report something to the client, if you want to include a report to management. The representation letter is critical. Why is the representation letter critical? Because we are relying mostly on management's representations, the things they tell us as part of their responses to our inquiries. So we might even want to add additional points in here, but again, there is a standard list of things to include in our representation. I just want to say in our confirmation with management, where we are getting that representation just in writing as well. So let's just see what that looks like so that we can also just know what goes in there. It is something you have to actually read. Here and there, things can be adjusted, if I can put it that way, as you go through the engagement, but you need to also just know that you are covering all the points and amending where that may be necessary. Okay. So we confirm to the best of our knowledge. And then information provided. We have provided you with, so the client is making the statements to us as the reviewers. To the best of our knowledge, we've provided you with access to all the information. We've disclosed all the non-compliance to you, litigation, related parties, and so forth. So all those things, they are making statements to us. And of course, you can always add extra things. Maybe one of my main concerns always is about the uncorrected misstatements. So if there are uncorrected misstatements, this sentence says the effects of uncorrected misstatements are immaterial, both individually and in aggregate to the financial statements as a whole. I'll read this last sentence. A list of uncorrected misstatements is attached to this representation letter. So that's why it's not the best version, but that's why you have this so-called summary of uncorrected misstatements just below that letter of representation. Doesn't mean you need to use that one. You can use it anyway, but remember to also include the disclosures, because this thing is very, very high level. I realize it's not ideal. Very high level of what the types of adjustments are. It doesn't show you the debits and credits, and importantly, it does not at all address disclosures. So you'll need to find a way of giving the client something decent. So what we have included, or what is included here already, is of course the actual misstatements in tables. There used to be these really lovely ones. They're not under the engagement history either. But even if you are making your own little schedules using a case view document, those will still just be the uncorrected misstatements. So ideally, you want to have a list with all of your uncorrected misstatements that are factual, that are judgmental, that are projected, and the disclosures. Right, and there isn't something like that. The best source or resource is probably using all the information in your evaluation of misstatements, your O240, but your disclosures are there, but not your detailed journal entries. Okay, so just make sure that you give the client something detailed attached to this list of, or to this representation letter. Good. Property, plant, and equipment. All of these accounts are then dealt with in detail to address all the minimum representations that we need from the client. Of course, you can always add to them. Right click, enable editing, and I can add to the sentence as much as I need to. And then just remove the enable editing, and then I've changed the representation letter. Okay. Client, a client can sign there, and I can add an additional person to also sign and then have that additional space there. So maybe there's 2 directors that want to sign or something. I can give 2 spaces there. Good. Let's look at our partner sign off. This is the final document that the partner will use when they are going to sign off the engagement letter, not the engagement letter, when they're going to sign the review report. So let's just look at what the partner needs to conclude on here. Just waiting for it to open. This is now running all kinds of scripts in the background to get the results and everything from all the sections. Good. So here we literally have a summary. Let me make it big enough again for us to see what was in there. So for accounting records, I didn't sign off all the work procedures, so that's why it looks a little bit strange. If you have signed all of the procedures, it will probably be difficult for the partner to know that all the procedures were done. But the fact that there are no exceptions and that the work program has been signed off would hopefully give the partner enough comfort in this regard. Right? They can also go and follow the hyperlink, just go to it straight and see what's in there. But at least they can see there are no exceptions. They can see that the work program was signed off by and reviewed by, and they can comment. They've got a space to comment. They can see the results where we said no indication of material misstatement. Opening balances, we didn't open, so that's why nothing's been signed off as well, but that will come through. We spoke about the financial statement preparation. I didn't sign anything off, so it's also blank. Laws and regulations, blank, we didn't open. But then when we get to the sections, the financial statement areas, here we can see property, plant, and equipment, the likely to be misstated item that we marked, what was our response, the conclusions, where we had maybe signed off on them in the work programs and the partner could comment on them. Then the number of procedures completed. The exceptions here are indicating where we said there is an indication that it's likely to be misstated, and then what we had done about those. So the exceptions could be indicating to us where we had said yes, and then to conclude, and the partner will then come and see what was the last or the final or the ultimate conclusion, if you want, on this work program. So I see they had to do a bit more work. Quite a bit of things to consider there, but ultimately they concluded that they were happy that there's no matters likely to conclude. You know what, I want to go and look at this and go follow the work program, look at the work and so forth. Maybe they missed this item. Loans to stakeholders, there we said it was not material. We just had, what did we have there? I think we had a procedure. So we signed the likely, no, it's not likely to be misstated. Can't remember what we had there. Maybe it was we said it was qualitatively material. That was the matter. It was qualitatively material. Have you identified? No, you know what, this here, that's what always confuses me. So make sure it doesn't confuse you. This one, we didn't have procedures, but we still had to sign off on the conclusion. There was not material. There was nothing likely to be misstated. So it said during planning, it was identified that the section is not likely to be misstated. Conclude. Did you during identify it will be material? No. Have you during the review identified issues that causes you to believe it's likely to be misstated? No. And so those two sign-offs is effectively causing the complete. The complete is always a difficult one, but the fact that there's no exceptions, the fact that the sign-off shows clean, that's basically what the partner can look at. Okay. And again, this naughty user Larisha did not sign off the work programs, which obviously also leaves a lot of wonder here. And so that's how every section will go through. Inventories was material. I hadn't signed off anything, but we did say, did the results indicate that the financial statements may be materially misstated? You'd have your conclusion there. And every single work program is then included here for us. Okay, all the ones with the active sections. Good. Other disclosure that we also activated also there. And then we get to the partner declaration to basically just go through it and say, have we got everything? Was there anything I should have looked at, etc. What I want to point out for you is that the answers to the questions are on the right-hand side. Did nothing come to your attention? It's almost written in a negative side to say, no, nothing came to my attention. Because if I'm writing, no, it should be, it's written in the sense that I say yes, and that means it's fine. So did nothing come to your attention? Yes, nothing came to my attention. It almost sounds like a language lesson, eh? Did nothing come to your attention that indicate the team members breached? Yes, nothing came to my attention to show that the team members breached the ethical requirements, and so forth and so forth and so forth. In some cases, if there was something specific, let's say there's a declaration or something, you can put the information there and even include a link to it. Right, so that's what this column in the middle is. It's basically a column to include electronic references. What could that be like? It could be like reviewing the draft financial statements and then adding a link there. There aren't that many automated documents in the review like we had for audit. So for audit, there was a lot more stuff that was automated, like here, the considerations of the audit report, that will then automatically include the link for 0250. But in the review, with the draft financials, you're probably going to review the client's documents. It's going to come in from that side. It's going to be a bit more tricky to know beforehand what the references are. So it was drafted in such a way that it should be easy enough to complete, but it ended up not always being that easy with the review because we can't anticipate what those references are going to be. Okay, then the partner is going to sign off at the end. If there are firm mandatory procedures or anything, that will be included. And then the partner, again, we said the partner is Larisha, and she can then sign off there as well. If we had an engagement quality reviewer, remember in the planning we said we don't. If we had one, we would have had a role here activated for the engagement quality reviewer, who would then have had to sign off on these partner declaration pages as well. All right. Good. So ladies and gentlemen, that is the independent review engagement. I now want us to go back to our slides because we still have a few points that I want us to just address. The first thing is I would like to ask you to please give us some feedback on the course. This was now the first year that we ran the course on independent review, so I'm sure there could be other things that you want us to do, extra things you want us to include, things we might have not necessarily addressed, or things we could do slightly differently. Also, what I'm trying to do this year is to actually have the quiz online, just in case you wanted to test your knowledge. So I would really like to ask for you to please go online either using the QR code or that link, and to then go and complete the quiz. Oh, not the quiz, the survey. I'll just quickly show you the questions that I included there. So what experience level you are, I know many of you have attended many of these sessions, so you're probably going to be familiar with that already. A few extra or new different things. What was most beneficial to you? Obviously, there was no e-learning as such. So I don't know, maybe the quiz was very beneficial to you, and then you can add that one. I said that we tried to spread it over a few weeks, giving you time to complete the quiz and to process the information. Was it too short, too just right, or too long? Did you want it to be closer to each other? For future Get Ahead series, is there anything else we can still cover for the probe review or do differently, even if you want to add that? And then for future series, what other assurance and related services training would you like to attend? So this year we included the review. I think in 2024 we included SQM. Maybe you want SQM again. Maybe you want compilations. I don't know if there is anything other that you want us to include specifically. And then I also added to say from question 5, if there is one of those topics that you want us to address, to give specific things, specific topics in there that you maybe want us to specifically focus on. You don't have to give me a whole course layout. I'm not asking that from you necessarily, but just to give us an indication of maybe some things that you struggle with or things like that. Please don't leave us yet. I do have another Kahoot quiz on independent reviews, and also there are some prizes for that as well. So if you are now thinking, oh, this is done and dusted, yes, I can finish a little bit early on a Friday, just give us a few minutes. Just please give us the input on this post-course survey. Really, this is your opportunity to have a hand in how we change Get Ahead for next year and maybe give you some more valuable information. And then as soon as we have given everybody an opportunity to complete the survey, we will do our Kahoot quiz, which I know everybody enjoys when we do. So we won't be much longer, but yeah, please complete the survey. I've included the link in the chat. So if the QR code didn't work or you didn't like the QR code or anything like that, there is the QR code. But if you want to do it on your desktop, you can also use the link in the Teams chat. Just give another minute for you to complete still, and then even if you're not done yet, then you can always just keep that browser open to complete later on, but we'll start the Kahoot soon. Right, good. Time for that time of the day, Kahoot. So many of you will already know that we've got these competitions at the end of each of the series. Today, for the review course, we have 2 prizes only. Unfortunately, not 3. We only had 2 sessions. So there are 2 prizes. I must, however, now put a terms and conditions here. This morning, I said that case where staff and their families can't win prizes. So I know I've joked about that. Yeah, because some of our support staff also wanted to play along, and I said, you're welcome to play along, but you're not allowed to win a prize, so you need to pick the wrong answers, even if you have the right answers in your mind, or otherwise just play in your mind. And then the other thing also just that I want to just say is that if you have already won a prize on any of the previous sessions, then unfortunately I won't be able to give you a prize in this session. So again, please play along, but I'm going to have to then pick another person if you happen to also be a winner in this one and you've already won a prize in a previous round. Good. But then just for Kahoot, in case someone has not played Kahoot before or someone has not participated in our quizzes, Kahoot is, it's an app, but it's also a browser. So you don't need to worry about the app. It talks there about the Kahoot app. The only thing I do is I'll share the QR code with you just now, and I'll also give you the link. And then you can, when I share the actual web browser site later on, then then you can either scan that QR code and it will take you to a browser. Literally on your phone, it will take you to a browser, or you can play it in your browser in your computer. If you've got the app, of course, then you can just put the pin in there, but I don't even have the app. I just play along on the browser. Then how will you know when you get there, it asks you for your nickname. So you can pick your own name, you can pick any name. This morning we had the already ahead, and we had, I can't even remember everything. So everyone was there. That was great news. When you're joining then and you've put in your nickname, I also ask for your email address. And the only reason why I ask for your email address is so that I can contact you when you win a prize, not if, when you win that prize. So that's the second part. And then, and then when you're joining, when they've done all those things and you're basically in the quiz, then you'll see your nickname appear where it currently says waiting for participants. So if I said I am, let's say my name is, I don't know, the winner, then I will see the winner appear there. And you put in deferred tax as your winner, then your deferred tax name will appear. So all of our names will then appear there. You can also, you'll see there are reactions. So you can choose the reactions also, like a thumbs up or a celebration or whatever. Then you also see if your celebration appears, then you also know that you're in there. So I'm going to share the browser with you now so that you can all join. So there is the QR code, there's the game pin. I'm going to share this link, kahoot.it. That's the web site that you can go to when you join, or when you're on that, it's going to ask you for your game pin. Then you just use those 5 points of your game pin, and then you can join. Thank you. We've already got adjusted EBITDA. I think maybe you were already here this morning. I don't know, or we had some EBITDA there. I can't remember. Join. We've only got about we've got about 48 people. So clearly some people decided this is not going to be for them. So good luck to them. They obviously already know they're not going to win. But those of you that are still here, and even I know one of the delegates have won a prize this morning. So that person is just sitting it out. But I'm glad that you are still in the session to still participate and see what the questions are. So yeah, I'm going to give a minute or so just for everyone to join, so that we can have some more fun. I know that almost every session people say we need to play some more, we need to play some more. So it really is a lot of fun. If you are in the session, I would definitely recommend that you join the session. Mr. Coffee. Oh, goodness gracious me. Yes. I think I had about 6 cups of coffee today. So yes, I can then probably almost be Mrs. Coffee. So Mr. Coffee is going to be the fastest one, I'm guessing. Right, let's get everybody that wants to join. We've only got about 17 people, so sure, I didn't know you can use images. Wow. Right, 18 people. I don't want us to wait too long for everyone to join, so Join sooner rather than later. Yeah, we've got a few more. There are 10 questions. Every time I'd only do 10 questions. I think for this quiz, I did quiz questions. So basically pick between A, B, C, D and true and false ones, if I remember correctly. Again, 20 seconds to answer each of the questions. And we'll see the scoreboard as we go along. And then, of course, the podium. Unfortunately, today, number 3 is only going to have bragging rights. 1 and 2 will get gifts from Caseware Africa. Okay, we're on 22. Let's get those other people to also join, please. Maybe if I haven't said that yet, so let me just also mention that. You can't, unfortunately, participate on the chat. It has to be on Kahoot, because Kahoot gives you marks, not just based on your answers, but also based on how fast you responded to the answer, how fast you got the answer correct. Boss Lady, Bean Counter, we've got all of them joining us. Okay, we are on 25 delegates. Let's see if we can get to 30 delegates. Anyone else? Join us, please. If you join late, then you're going to miss the first question's marks that's available to you. I noticed that Caseware one. I wonder if it's a real Caseware person or if it's just someone who chose Caseware as their nickname. Right, is 27 what we're going to have? Right. Good. I hope you are ready. Oh, lovely. We've got number 28. Good. So we're going to start. The good news is that the question first appears and then only will the options appear. So you've got a bit of time to first read the question before you get going. Right, let's go. Independent review engagements. True or false? Independence is required for an independent review engagement. Hopefully an easy one, just to kick us off. Absolutely. Independence is indeed required for an independent review engagement. I don't know how to pronounce that face, so I'll just say face. The face is obviously first, and then we've got adjusted, EBITDA, SA, Mr. Coffee, and Taiki. You can see the faster you responded, the more marks you got, but not always a big difference. So yeah, let's see. Quiz question. An independent review engagement is performed in accordance with which standard? Right, it is indeed ISRE 2400. ISA 5000, that's how they pronounce that one in the green. That is the new standard currently on the sustainability assurance, the international standard on sustainability assurance. It was adopted in South Africa at the end of January and is effective, I think, only from about 2027 or somewhere there. But yeah, definitely something exciting. ISA 200 is the audit standard. I think now I can't even remember which one of it is, but it's an audit standard, and ISA 3000 is other assurance. So that's the one that you use for attorneys' trust accounts and those kind of engagements. Right. Scoreboard. You guys are up. Trying is the highest climber. So you are definitely trying very hard. Well done. Let's look at the next one. Quiz question. Which of the following procedures are primarily used in an independent review? Excellent. Primarily inquiry and analytical review procedures. You can do the others also, but primarily inquiries and analytical review procedures. Scoreboard. Taiki looks good. Pumpkin, you're the highest climber. Well done. Quiz question. Which of the following is a key objective of understanding the entity in a review engagement? Why do we have to understand the entity? What do we want to do with that? Excellent. To identify areas where material misstatements are likely to arise. Good. Harvey, you have the highest answer streak of 4, but unfortunately you did fall off the board. But we've got Mr. Coffee and Adjusted EBITDA climbing the scoreboard. Question 5, true or false? A review engagement may include procedures other than inquiry and analytical procedures when necessary. True or false? Absolutely. It can require or include rather other procedures than inquiry and analytical procedures like verification, for example. Scoreboard. Oh, Mr. Coffee and Adjusted EBITDA are chasing each other. Kat, you have a streak of 5 correct answers in a row. Well done. There might be others of you as well. I'm just reading what Kahoot is telling me. Good. Let's see. Number 6. What type of assurance does an independent review provide? Guys, I will admit to you, I had to actually go and Google this one because I saw this and then I got confused again. I confused reasonable and limited assurance. So I'm not surprised necessarily that you guys also got confused between the blue and the yellow. Reasonable assurance is the audit. So audit is never absolute, but it's reasonable. It's like a positive one, whereas limited assurance is a negative one. So the answer is limited assurance, absolutely. But well done to the 15 of you that got that right. And Taiki is up again. 8 participants just dropped their answer streak of 5. So clearly that was a bit of a more tricky one. Good. Next quiz. When a practitioner identifies a matter that may be materially misstated, they should what must they do? Absolutely, perform additional procedures. Must tell you, the only thing I noticed in this question now is this: ignore it if it is not pervasive. All those I's really confused me when I had to type them. So yeah, absolutely, you will perform additional procedures when you identify matters that identify a matter that may be materially misstated. Good. Scoreboard. Mosmo, you have moved up. Well done. 4 participants reached an answer streak of 5. Yo. Okay, let's see question 8. True or false? Analytical procedures are used to identify inconsistencies and unusual trends. True or false? Yo, you guys are quick on this one, eh? Wow. Yes, absolutely true. Scoreboard, Mr. Coffee. I think Mr. Coffee must get a coffee if he wins, eh? What do you say? Well done. Let's see. Question 9, 2 more to go. We use performance materiality in independent reviews. We're missing one responder. Okay, we do not use performance materiality. We only have overall materiality, no performance materiality. And Mr. Coffee is still ahead. Whew, who's going to beat him? KS is back with an answer streak of 3. And the final question. Quiz question. The result of an independent review is a report with a conclusion. Well done. The opinion is an audit opinion and the review has a review conclusion. Good. Let's see. What does the podium show? Kat, well done. You have bragging rights. Bean counter, congratulations on your prize. And Mr. Coffee, you have really worked hard. You have earned your prize. Runners up, Harvey, and now I missed that last name. So congratulations and well done. And thank you for your participation. I'm not always sure if it was so much fun, this one. It was maybe some of them were very difficult and some of them were maybe too easy, but well done to Mr. Coffee and Bean Counter. Right. I always just like to ask for some feedback. Do you want to do this again? Should we do more of this? I'm also thinking of possibly in future using Kahoot instead of the polls. So doing a poll. But now the trick also with the polls is you don't want to actually discourage people from participating. I rather want people to answer, but maybe people will be more keen to answer if they know there's a potential for a prize, or maybe it's just more fun to do it in a Kahoot than on a Teams poll. I don't know. So you can just give me some feedback on that, please, if you don't mind. Right. And that, ladies and gentlemen, brings us to the end of today's session. So all that remains really is to say thank you. Thank you for your participation. Thank you for coming to join us on Friday afternoons. I know Friday afternoons are not always the best option, but in order for us to finish everything before the end of the month, or before Easter, before the school, well, school's closed today, but before the holidays begin, we needed to do it on Friday afternoons, but it will also be available on recordings on the e-learning. The recordings will be on the Success Community, so you will still be able to watch them again or share them with your colleagues if needed. So that will still be there. Thank you for participating and keep well. Goodbye.